Good morning. This is Len Nevin with Loyalty Home Group at eXp Realty. I want to talk about, big shocker, the real estate market. Couple big things that I've noticed today, just looking over some of the stuff, preparing for this conversation. It's been a couple of weeks since I put up anything. I wanted to kind of just get a feel for just what was happening after the election. There's obviously lots of emotions that are tied to any type of an election cycle, and I wanted to see how the real estate market would be impacted by the results or whatever, across the country, across the board, and kind of what we're seeing here. And I've got some interesting stuff and a lot of more of the same, to be honest with you. And let's that being said, let's fire away. So first thing I want to talk about, obviously, we're based, our home base is here in the Phoenix marketplace. So I talk about Phoenix first quite a bit. Obviously, I'm born and raised in Chicago. We still operate a team out of Chicago, and we do a decent amount of business there as well. And so we talk about Chicago. I've recently been talking to some people. It looks like we may be jumping California back into the mix here soon. Don't have that 100% specific yet, but it is something that we're talking about, and other parts of the country as well, as we look to kind of get our partnerships kind of figured out across the country. So I like to have personally a bigger, big eye view as far as things are going, and that helps a lot. So without further ado, and that actually just made me think about an article I read this morning. So I'll see if we can find that while we're kind of running this as well. So first things first, let's take a look at the Phoenix marketplace. Now this is the smallest chart I've ever seen in my life, so let's see if we can't just make this a little bit bigger, through at least through a print or something. That's not really doing me much good, so let's use the old zoom function and see if that can help us out a little bit. So this is the Cromford Market Index. If you want to pause the screen, as you'll see here, it basically says it measures really the supply index, demand index, and then so the market index is the balance of the supply versus demand. And basically when it's going up, that means the buyer demand is high. When it's going down, buyer demand is low. And you'll see what's interesting is this is a yearly snapshot, right? So this is a big picture overview, and what we kind of see, I mean, you can all the way back to 2003. So between 2003 and 2005, you had this big run up, and this is always the interesting thing. This is what I like to talk to people about when they ask me, "Oh, there's a crash coming," blah blah blah, whatever. We didn't really see the crash. Like, people didn't really start talking about the market, like, "Oh my gosh, like the world, the sky's falling," until 2007, like right in here, 2008. And so what was happening behind the scenes was over a year's worth of demand just falling. So a year's worth of demand before people really, it kind of hit here. I mean, even in December, so look at that. That was April through December. You just saw a nosedive in demand, but people really didn't, they kind of, oh, things are a little funky, but things didn't really hit the fan until right around in here. And this is why I like to tell people is it's like, when things were here, there was already about a 3 month supply of inventory. And when they dropped down to here, it jumped up to like 8, 9, 10 months worth of inventory. So when that market technically crashed, so like when we saw the Lehman Brothers thing, we saw the stock market crashing, when we really start to see, like, there's this conversation of leading indicators versus lagging indicators. This was absolutely a leading indicator, right inside of here, saying there's something going on here. So this is why I like to look at this, is because what's going on. These are leading indicators, and people didn't really realize it until here. And it's like, look, now we can look back and go, oh wow, this is what was happening. But the stock market crash, Lehman Brothers, all that stuff, that was because of this too. So then you kind of look, and we had this natural recovery, up and down, up and up and down, and then this is June. I mean, look at this. So this was March up here. Then we obviously COVID, and then it shot up. And this is where we're at right now, is this all-time high, and this is the entire Phoenix metro area. So let me kind of go a little bit less tiny screen and go more into, that's a 10-year, it's more than 10 year, that's a 15-year snapshot, I mean, for the most part. So let's look at May through November. And so when you look at it here, you saw this shoot up here, and then it's just kind of steadily grown, right? So buyer demand has continued to grow. And so when I look at, if I go by city, this obviously is going to pick Phoenix as the major city. That's the largest city, the most highest populous city in the Phoenix metro area, obviously. So once this finally says establishing secure connection, of course, I'm being delayed on this, so gotta love technology. It's just, you can see it sitting there spinning. Here we go, now we're loading. What we'll see in Phoenix is the same type of thing, right? So this is the entire Phoenix metro area. This is all Phoenix. So this is Ahwatukee, this is North Phoenix, Central Phoenix, and you saw that kind of, you know, between January, so this is a 1-year snapshot, popped up, dropped down, popped back up, it's kind of slowly, but it's, you know, and it's in the middle of this uptick, and so that's what I'm talking about. So we had the election right around here, because this was updated November 12th, so we should get an update, you know, a couple days, but, you know, election and kicked right back in. So, you know, people always talk about like things that happen during an election and, you know, real estate slows down, and sure, there was your slowdown waiting for the election. People made their vote, they started seeing the results come in, and they're like, okay, life goes on, and back to normal. And that's typically, honestly, what I've consistently seen. I mean, it'd be interesting if I could do this. So, look at 2016 election, was flat, hard to say there. Before that was 2012, and it just dropped down and then kind of shot back up. 2008 was, let's see which one, 28. Oh, 2008's down here, kind of flat. So really hard to say, but I guess that's the biggest blip you can actually see in recent history for that. So that's the Phoenix area. You go to places like, you know, we do a lot of business in Gilbert, and in Gilbert, if you're a buyer in Gilbert right now, it sucks. It's just, the demand is absolutely through the roof, and it's just been, I mean, since, for the last even 30, 45 days, it's kind of slowly trickled up, and now it's just shot back up. And I remember, I was the one saying it right here. I'm like, you know, started to see it go down. I said, it may continue to go down, or it could just shoot back up. We don't know, and apparently we don't know because it shot right back up. If you're looking at like Chandler, this is another East Valley town, same thing. Look, it's skyrocketing. This is buyer demand. So this is not any falsification. This is not, you know, anything other than buyers making decisions and saying, I need a house. Mesa has slowly, it's, you know, it's not as much of a steep incline, but look, it's not going down either. You know, you can even go Apache Junction, which is, you know, East Valley, and it's skyrocketed, and it's, you know, it's still sitting at this all-time high. So if you're a seller in any of these towns, things are looking good. If we go to the west side and look over at Glendale, it's the same thing. We lost a little bit of demand, and now it's come back. Peoria is another part on the west side of town that we do some decent amount of business in. It's the same thing. It's just all across the board. Gold Canyon, which is pretty much, this is a good one to look at, because Gold Canyon is it's a seasonal location, right? So typically, a lot of people, I'd say the highest percentage of the population of Gold Canyon are what we call snowbirds. And, you know, we saw the demand skyrocket right up until September. It started to drop down, which is pretty typical. I mean, you look at these curves, this is, you know, 2 years ago, up, down. It matches. These patterns are the same for the most part, but what we're seeing here is, you know, it looks, so last year, floated here, 2018, kind of goes up a little bit, and it'll probably go back down, and it'll probably match a lot of what we've seen, but this is, what happens is, and the reason why the demand is, so this is the question is, oh, well, why is the demand shoot through here between May and September? Well, in Gold Canyon, what happens is because it's like I said, a major snowbird town, is people are in town, and there's just a bunch of listings to choose from, right? And so right around May, everybody goes, it didn't sell, taking it off the market. So your inventory, and I'm just making up this number, but your inventory can go basically from 1,000 homes down to basically 400 to 500 overnight. You know, almost like June 1st, it just, everybody comes off the market end of May. And so you have this big spike in buyer demand because maybe, you know, not if there was 1,000 buyers out there, maybe there's still 750, but now the 750 buyers only have 400 homes to choose from versus, the latter. And so there's always been an argument we've talked about in Gold Canyon is, do you sell during this point? Which really looks like, if you're in Gold Canyon, statistically speaking, your best bet to get the closest to your asking price is probably going to be between August and September. That's, that seasonally has been, I can keep going back and, look, it's a very similar pattern. Year after year after year after year after year. And you see it goes up, down, almost like clockwork. So that's the Phoenix market. One of the reasons is that we're looking at is this concept of inventory. So, the amount of listings, available listings. So here's the active listings count, and this is the biggest reason is there's just not enough listings. So, this was back in May. So, we kind of go here. This is a 12-month snapshot, and inventory was dropping because buyers were coming out in spring like gangbusters. COVID hit, people stopped for a little bit. So the listing count shot up and it came back down, and it's just, you can see it's just continued to go down. And we can look at just Maricopa County, and Maricopa County basically mirrors the exact same thing. So all of Maricopa County right now, there's only 6,400 homes available for them people to choose from. And it should be, you look at the beginning of the year, or almost a year ago, so this is 10/17, so just over a year ago, there was almost twice as many homes. There was 11,476, so a big number more than 5,000 more homes basically to choose from. So that's the story of Phoenix, is there's just not enough homes for people to sell, or for people to choose from, and that's just continuing to drive the demand as more people continue to move here. And you have more people with less to choose from, and it's causing what we're seeing here. So let's jump over to Illinois real quick. This is that graph that we found recently, and I'm very thankful for it because it's giving me some information on more of a weekly basis. And so closed listings, once again, 2020 just continues to be up week after week after week. More and more properties are closing. More and more rentals are going under contract. Listings are going under contract. Look at the number of listings under contract compared to last year. So, the story is, even still, in November 19th, Illinois is experiencing colder weather. People are going, well, I don't really want to put my home on the market. It's December's coming. It's Christmas time. Illinois has a 60-day, pretty much 45 to 60 days is what you're expecting for your closing time there compared to here. So that's something that people are, looking at and taking a look at and thinking about. But I'm saying compared to last year, you're much better shape now because there's typically been less listings. This is the first week in a while that there's been more new listings than there was last year. And it's probably because of what I just said. People are going, well, if there's more contracts happening now than last year, maybe this is a good time of year to sell. And people are starting to see that. Rented listings, that's stayed pretty steady. That's not as big of a story, obviously, just because, but that means, rental listings are good because that means people are, still living there. This is your inventory for basically, total inventory. So you can see as the year has gone on. So here's 5/11. That's your overall inventory. This is what we call temporary off the market. This, temporary number. That's the black line versus the blue line. You can see it just went up and it's just kind of come down. And so the available inventory is just week after week after week is less and less and less. Open houses has stayed pretty steady. We'll have to keep an eye on that, considering they're doing some more shutdowns in Illinois than they are in other parts of, at least here in Phoenix at this point. Sold price is up, and rented prices 2 weeks in a row is basically one was the same. So, but 3 weeks in a row it's not held as strong, but that could be because more people are buying versus renting. So that's kind of the conversation with Illinois. One of the things that's driving things right now over the last couple weeks is we just saw, last week I had a conversation with a buyer and he's like, well, I saw interest rates are going up. Well, they ticked up, but look, they just ticked back down. 2.72, lowest we've seen. So now it's right back down to, to a historic record again. So our lowest, we were like, oh yeah, 2.78. Now it's no, 2.72. Just continues to go down. If you can float a 15-year arm, a 15-year mortgage, 2.28. I mean, we may be looking at being able to get, a mortgage rate into the ones here before this whole COVID thing is over, because a lot of this is driving the demand, because buyers know, geez, I gotta take advantage of this, because, when are rates going to be this low again? Who knows? I read an article they were talking about this morning. So right now, they said the job market didn't look too good today. So the Dow's slipping a little bit today. But I saw something about homes, and I'll have to pull that up in another article. But they were basically saying that the projection for what people, with the number of homes they were expecting, was way higher than what actually ended up being, or what they were projecting. So the amount of properties across the country that sold is just way higher than NAR, the National Association of Realtors, had expected it to be. So that's a big piece of what's going on nationally. And when I talk to agents that I have relationships with all across the country, the majority of the markets, people are busy. The majority of the markets, we're looking at multiple offers, because the majority of markets, we have the same issue of an inventory crunch. And new builds are not going up as quick as they can. Talking to a new builder yesterday, it was just reminded me that a big part of the costs of the new builds is going up is because the construction cost is going up, because the labor, not even just the labor costs, but the material costs are going up. Because back in May, when there was when everybody shut down, you had factories. Your 2x4s are made in a factory. So they're cut, but there's people who have to push those through. There's people who have to stack them. There's people who have to organize them. So if they went to, a reduced staff, then there's always the cause, that leading indicator again. So when you have a shutdown of a factory, that's a leading indicator that in the future, at some point, there's going to be demand on that product, and there's just not going to be as much for them to be able to give. Go and order a refrigerator, and you tell me how long it's going to be before they're going to be able to deliver that to you. And I'm hearing weeks. We ordered furniture this year. That took about 2 months. I've had clients who are over 2 months on their furniture deliveries. I mean, so it's across the board that we're seeing that happen. So that could continue to drive pricing of homes, and and the unfortunate not being able to build them fast enough based off of the demand, and that just continues to add to the inventory shortage that we're experiencing. So that's kind of what I got for today. Reach out if you have any questions. Reach out if you have any specifics about your home. I mean, I was talking to a client who we put in a property back in the spring, and he's in a new home community. He was able to buy a resale of a new home already, but there's still new builds going on all around him, and with everything going on, he's looking at probably already sitting on over $100,000 in equity on the house, just based off of, granted, let me rephrase it, he put in a pool, did some other stuff to it, so he's done some upgrades to it. It hasn't jumped up in just straight value by that much, but he's definitely poured some gasoline on that, and he's ecstatic. So it's good stuff for him. So let me reach out. I'd be happy to run the numbers specific for you. Each neighborhood's different, each pocket's different. You could be in Gilbert, but this pocket's going to be better than that pocket. You could be in Mesa, but this one is going to be different than this one based on just certain criteria. So it's more of an art than it is a science, and you can't just go to Zillow and go, because that's just it's an algorithm, right? The algorithm doesn't know what you've done. The algorithm doesn't know that your neighbor's a bum who doesn't mow his lawn and keeps a beat up pickup truck with up on blocks on it. That's bringing the neighborhood values down. All those little things. So reach out. That's what I'm here for. And obviously, if any questions, that's reach out for those too. Thanks, and have a good rest of your week, and we'll talk to you soon.